Hi there, traders. This is Brad Gilbert with the FX Market Insight for Monday, the 7th of September. Right, as the markets open up for the week, just a good point is have a look where the currencies are, obviously, but why they're there. And that's looking at the sort of US, how the US market or North American market closed Friday. The equity markets closed down. Okay, the NASDAQ getting a little bit of a touch up. Dow Jones down just over 0.5%. So that's a bit of a risk-off sentiment coming into Monday's trade. But what we're seeing is a bit of to and fro here on the US dollar. Now, just coming back here, obviously the non-farm payrolls on Friday was a big number. The currencies were in the balance, whether the dollar would rally or fall. You know, it's really going to come down to these numbers. But the hard part is, I mean, the non-farm payrolls themselves were barely different. The unemployment rate was much lower. Now, that could be a participation factor. There's no details here about the participation, so we'll have to sort of wait to see how that goes. And average earnings were up as well. So to me, there was some positive results here out of these numbers. Now, to me, when you come back, and I'll just give you a quick look at the news, what I'm trying to say is there's a bit of a conundrum here with regards the US dollar being a safe haven, and then the dollar acting or performing according to how the economy is going. Whether, you know, weak numbers, the dollar goes down, good numbers, the dollar goes up. But then if it gets too bad a situation, then the dollar rallies on weak numbers. So it's a bit of a conundrum that we've got. So, and this is not unlike for a lot of traders who are new, say to TFT or just the markets themselves. The non-farm payrolls are not easy. And the price action here, if you have a look at across all the major pairs around the release of the non-farm payrolls, you usually get a bit of a knee-jerk reaction. There's about 6 to 8 different variables released at the same time. It's not as simple as just non-farm payrolls are strong or weak. There's a number of other factors that you have to keep into play. So what happens is liquidity evaporates, right? All the brokers, all the banks, not the brokers, the banks pull their liquidity because they don't want the excess risk on these huge sort of variables. And then it comes back in very quickly. So, but what we did see, let me just delete those. You see, okay, a little bit of dollar strength initially on the release. And that's, you know, they're sort of saying, well, you know, job growth hasn't rebounded as much. So the dollar safe haven trade, okay, so weak US numbers, we get a stronger dollar, comes into play. And then it, you know what, that lasted for a short period and then it just sort of bounced from there. So to me, it's a little bit hard to say where's current short-term momentum. This sort of price action where it goes up and down, especially through a level, enough, liquidity that isn't there, right, gives the traders, it can bounce through these trend lines, right, false breaks. And what that does is really diffuse the momentum in the market, okay? So what you end up with, if I just give you a look here across a lot of these charts, you can see here the dollar index, I mean, it's sort of bounced and now trading sideways. What we're left with is the long-term daily trend lines, right? They're the only ones that actually are telling us stuff. Like dollar yen just trading sideways. Okay, let me just give you a quick whip through these. Dollar CAD, okay, still trading to the downside, but, you know, diffused on the hourlies, but down overall. And this is the same across the board. Dollar Swiss, a little bit, you know, it's sort of bounced back up through this level to me now trading sideways, but overall still going down. So what we're left with as you go through your daily charts is the hourly charts, you know, where you see a lot of the price action is real. The momentum is really diffused, but we do have longer term trend lines in play, right? Especially Euro, Sterling, Aussie is right on that level. It wants to sort of, it can't work out where it wants to go, but to me, it looks like it wants to go down, but the US numbers keep coming a little bit weaker and it keeps holding it up. And the Kiwi, well, it's still above the trend lines there. So if I just bring you back to the daily market insight, this will hopefully clear things up for you. So what we've got is a situation where the direction of the currencies, right, longer term, yeah, we've still got these trends in play. Now, the momentum on those long-term trends doesn't need to be always just surging higher, but as long as it's above support trend lines going up or below resistance trend lines going down, that's the trend, right? What we're looking for is where that short-term momentum comes into play on the short-term trends. This is what's been diffused. And ideally what we're looking for is the short-term trend to match up with the long-term. You get an easy direction on the currency and then you jump in. So at the moment, we're not seeing that coming into Monday. Non-farm payrolls have completely diffused that. So you just have to wait and see what's going on, especially as the weekend news is factored in. Now, you can go through and just go through last week's trades. The smart thing to do is actually come down to, if you've got an economic calendar, come down and actually go through what's coming out this week. Now, there's nothing really a lot coming out today. I think it actually may even be Labor Day in the US and Canada. You've got, we've got some numbers coming out. The most important things usually are the central banks. Okay, we've got the Bank of Canada and the ECB this week. Now, you should be writing those down on your journal, on your notepad. Those key events can change the course of the currencies, right? We are very interested in what they've got to say. And as you go through the week, there's US CPI on the 11th, okay, Friday. That's going to be a key event for us as well. It's a shame it's not coming out on a Tuesday where we get, maybe potential direction on the US dollar as we go through at the start of the week. So that's where we are, guys. It's not as simple as it is right now with those non-farm payrolls. I think it's the price action here on the dollar index as well is very indicative of how the market sees or interprets the data. It's not exactly clear, right? To me, it's a building block. We need to start, let some things happen, let the news come out for the start of the week, and let's start to build that momentum. All you can do as a trader is isolate the best trading positions, and that's where you go and do your technical analysis, not just on the majors across, the crosses, metals, commodities, everything. Check everything out, find out where those potential entries are, and then we just have to wait for the momentum to come back into the market. All right, guys, have a good trade week. Cheerio.